Jasco's revenue for financial 2012 is up 28% to 990 million. The operating profit for the year was up 8% to 31.2 million, with ICT now 72% of this total. Moving to the net interest paid line, this was up from 14.3 million to 8.4 million. The next line item on the income statement is the share of income from associates. This relates to MTech, and I'm pleased to say our share of earnings was 10.1 million in the period, up from 4.5 million last year. So our PBT is up 9% to 27 million rand, and the effective tax rate has reduced to 25.9%, below the statutory rate for the first time. The profit for the year is up 48% to 20 million rand. Our profit attributable to ordinary shareholders for the year is up 130%. Our total shares in issue increased to 146.4 million shares in issue in 2011, and this related to the Spectrum acquisition. The weighted average number of shares is up from 122.7 million shares to 149 million shares. This 15% increase therefore dilutes the impact of the higher profits to some degree, and EPS is thus up 100% to 15.6 cents. The headline earnings per share of 16.8 cents is up 20%, which is a pleasing result. If we look at our balance sheet now, the most important item to discuss is our working capital position, namely current assets and current liabilities. I'm pleased to say that since the December 2011 interim report, our net working capital days have improved from 35.4 days to 31.7 days. That said, it is still above our internal target of 30 days. The next most important aspect on the balance sheet is the long-term funding of the group, most particularly our gearing ratios and the preference shares funded by our major shareholder, Afrocentric. These preference shares at 100 million rand will only be redeemed on the 30th of September 2013, not before. Our shareholders have been very supportive in our ongoing conversations that we've had with them over recent weeks, and we certainly look to conclude this process of finding alternative funding by the time we report again in December 2012. If we look at the actual gearing ratio, the gearing ratio at the end of this year was 44%, down on the 48% in December and similar to last year's levels. If we exclude the redeemable preference shares, this drops down to 15%. Another point to note is post-year end, we've sold our Midrand property, the head office property, and as soon as those cash flows in the first half of new financial, we'll see that these respective ratios will drop to 35% and 7% respectively. Moving to the cash flow for the year, cash generated from operations of 55.4 million is higher than the operating profit of 31.7 million, which is pleasing. The net cash generated from operations has improved strongly from 3 million to 24.5 million. The other usual items that appear are finance charges of 14.3 million, which have increased, taxation paid of 8.8, which has decreased quite substantially, as well as the usual dividend payment. Capital expenditure for the period of 16.5 million, most of which was expansionary in nature. The overdraft position increased from 16.9 million last year to 31.8 million by year end. This, however, is an improvement on the interim position reported of 38.4 million.